Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the massive pile of corporate announcements that flood your screens every single day. Today we are diving deep into PPL Corporation's latest annual report. And folks, this one is a doozy packed with numbers, strategies, and some seriously interesting risks. So, PPL Corporation just dropped their end report for 2025, and while it looks like a typical utility company filing on the surface, there are some fascinating details hidden within, and we're going to unpack them for you. Think massive infrastructure projects, regulatory battles, and a look at where this energy giant is heading. Before we dive in, if you want more straightforward breakdowns of complex financial documents, please hit that subscribe button and ring the notification bell. Also, we have built an amazing community of finance enthusiasts over on Discord linked in the description. If you want to join the conversation, let's start by looking at what PPL Corporation and its subsidiaries are all about. They are a utility holding company, and their business spans across Pennsylvania, Kentucky, and Rhode Island, and they are involved in electricity and natural gas delivery, plus electricity generation in Kentucky. Now, the report is filed by PPL Corporation itself and its major subsidiaries, which include PPL Electric Utilities Corporation, Louisville Gas and Electric Company, and Kentucky Utilities Company. It is important to note that this is a combined report, and while information is presented for each company, PPL Corporation is the ultimate parent. We see some leadership shifts happening with J. Gregory Cornett moving up to President of RAI, and also continuing as Vice President of Corporate Security. These moves might signal a focus on integrating operations and strengthening security measures, which especially for an energy provider is super important. Let's jump straight to the financials because that is where the real story often lies. For the year ended the 31st of December 2025, PPL Corporation reported total operating revenues of over $9 billion, a nice jump from its 2024 revenue. Net income jumped significantly to $1.181 billion compared to $888 million the previous year. The Kentucky regulated segment performing particularly well, contributing $674 million to net income. PPL Electric saw its operating revenues increase by $237 million, largely due to higher prices for its provider of last resort, or PLR service, combined with increased volumes from weather and other usage factors. Their transmission formula rate also saw a boost reflecting new capital investments. Louisville Gas and Electric Company also experienced revenue growth primarily driven by increased sales volumes and higher recoveries for fuel and energy purchases. And Rhode Island Energy saw substantial revenue growth mainly from higher energy purchase recoveries and increased capital investments. These numbers show a company actively growing and likely passing on costs and investments to customers. What is really telling is the operating income. It surged by $389 million year over year to over $2.1 billion. This indicates that despite increased expenses like fuel and energy purchases, the company managed its operational costs effectively. Now let's talk about a recurring theme these companies often face: utility rate regulation. PPL utilities are cost-based rate. Regulated meaning regulators set the prices to allow them to recover costs and earn a reasonable profit. This is a double-edged sword. On one hand, it provides stability, but on the other, it means they can't just raise prices whenever they want. Their financial statements reflect these regulatory actions with significant amounts in regulatory assets and liabilities. These represent costs they've incurred but are waiting to recover from customers or amounts to be refunded. For example, PPL itself shows over $2 billion in non-current regulatory assets and over $3.3 billion in non-current regulatory liabilities as of December 2025. These numbers are huge, and they directly show how much the company's financial health is tied to regulatory decisions. Looking at the balance sheets, Kentucky Utilities Company's total assets grew to over $10.7 billion by the end of 2025. This is a sign of ongoing investment in infrastructure. And speaking of investment, the company is pouring money into its infrastructure. PPL Corporation's capital expenditure projections for 2026 through 2028 are enormous, totaling over $17 billion. This is not pocket change, this is serious investment likely driven by the need to modernize and expand to meet future energy demands, especially from things like data centers. Financially, the company has a substantial amount of long-term debt, around $19 billion for PPL overall. Interestingly, they've been active in managing this debt, repurchasing some affiliate bonds, which resulted in a pre-tax gain. This suggests they are actively managing their financial structure to optimize costs. Their credit facilities are substantial with over $3.5 billion in committed capacity and very minimal borrowing as of the end of 2025. This indicates strong liquidity and a good position to access funds if needed. The companies rely on major banks like JP Morgan Chase Bank for their financing needs and have credit ratings from Moody's and CMP, which are crucial for their borrowing costs. Thankfully for them, their credit ratings are solid, which is good news for their access to capital. Now, no corporate report is complete without a healthy dose of risk factors. PPL and its subsidiaries are heavily regulated, and that comes with its own set of challenges. They are exposed to changes in environmental regulations, especially those affecting coal-fired power plants. Climate change is also a major focus with goals for net zero carbon emissions by 2050. The company is investing in newer, cleaner technologies, but acknowledges the challenges posed by potential load growth from data centers and the uncertainty of future regulations. Cybersecurity is a huge deal for these companies. They are constantly under threat from cyber attacks, and a breach could be disastrous. They have robust processes in place with reports going all the way up to the board of directors. But with the increasing reliance on AI and complex its systems, the threat landscape is always evolving. Leadership like Vincent Sorgi, PPL Corporation's president and CEO, are navigating these complexities, balancing growth investor demands and what regulators and the public expect regarding environmental, social, and governance or ESG concerns. One of the key risks highlighted is the reliance and vulnerability of their IT systems and operational technology infrastructure. They even mention the evolving threat of artificial intelligence, which is interesting and a bit scary to think about in the context of critical infrastructure. And of course, environmental matters are a massive part of their business, especially given their history with coal-fired generation. They are dealing with evolving regulations on emissions, waste management, and water quality. While cost recovery mechanisms exist through rates, there is always the risk that regulators may not approve full recovery or that new regulations could significantly increase costs. So what is the verdict here? PPL Corporation and its subsidiaries are deep in the regulated utility business. They are investing heavily in infrastructure likely to meet growing demand and environmental needs. Their financials show growth and solid revenue streams, but this is all happening under the watchful eye of regulators. The company is trying to balance shareholder returns with customer affordability and environmental responsibility. That is a tough balancing act, and the constant regulatory scrutiny is a key risk factor. They are also heavily exposed to the risks of cyber threats and environmental compliance costs, which could lead to significant unexpected expenses. But they seem to have a strong grasp on managing their finances and navigating the regulatory landscape. Alright, that is our deep dive into PPL Corporation's latest filing. What are your thoughts on their strategy and the risks they're facing? Let us know in the comments below. If you found this breakdown helpful, please give this video a thumbs up and subscribe for more corporate insights. And don't forget to join our Discord community linked in the description. Thanks for watching, and we'll see you in the next episode of Corporate Decoder.